Welcome to the University of Denver's Oral History. Our series begins in the mid-1980s when DU was on the brink of bankruptcy and continues to 2014 with the university a regional academic leader poised for national prominence. The interviews in this series present a panorama of progress against steep odds, stories told by men and women who were personally involved in saving the university and undertaking an extraordinary process of renewal. Their narratives are a true Renaissance tale. Today I'm joined by Craig Woody, who is DU's Vice Chancellor of Business and Financial Affairs and Chief Financial Officer, a position he's held since 1994. In the interest of full disclosure, as Controller, Craig was a senior person on our staff when I was DU CFO, and I can say from experience he's a highly capable financial professional. Craig Woody, welcome to DU's Oral History. Craig, you were in public accounting earlier in your career. What led you to DU in the first place? How did you get connected to the university?
Well, it goes back to 1975 when I graduated from college. And I actually had a couple of assignments, and I was on college and university audits, including Grinnell College, which today has a AAA bond rating. And I didn't know what a big deal that was. But I started in the Denver office in 1983 as a result of a transfer. And I was following, if you will, the news in the Denver Post about the University of Denver, and didn't have any idea at the time that I would ultimately be working here.
My goodness. So when you, how did you actually then get connected here?
Well, I was in the office one day, and a partner who had transferred to the Denver office from Austin, Texas. He had actually just come back from a cold call to the University of Denver for audit services, and Liz Williams, who was the chief financial officer at the time, told him, "I'm not going to change auditors, but we are in the process of hiring a controller." So Tom came back, thought that it would be an interesting position for me, and I applied for it and got the job and worked for Liz for 5 years. Then I began working for you.
Now, early during those first 5 years, you were in an excellent position to see the emerging financial problems that the university was facing. What was your perspective at the time, and what do you think were the key elements that were creating these difficulties for the university?
Well, there's a couple of things. When I came here in 1984 as the controller, the thing that I found is that in the controller's office, every critical accounting form that was necessary to run the university was in the controller's office, and you would expect it to be in the accounting department. And as a result, the chief financial officer was actually maintaining schedules relating to the university's liquidity. And so while all of that is important, I believe that things were happening at one level too high. And people were forced, if you will, to do transactional processing, or transactional processing that required an element of judgment. But they were spending time and effort on focusing on what happened, as opposed to then researching and answering the question, why did it happen, and what are the implications to the university?
So these changes, which were obviously significant in the aggregate, were not necessarily as visible as they might have been to the right people?
And that's exactly right. If you think, for instance, that the auditors closed the university's books and we recorded dozens of correcting journal entries, the following year after I'd been here 10 months, we had zero. And so only people, if you will, that had an appreciation for the accounting function would have appreciated the fact that the auditors were closing our books a year later. The university was closing its own books.
Now, we've heard from Dwight Smith and others about the environment, the environmental changes going on, declining enrollments and so on. What, as you were watching this, what do you think were some of the key elements that were affecting the situation?
Well, the oil and gas industry itself was on a decline in Denver and in the region, this western region of the United States for that matter. And the university's enrollments were not immune from that. The university declined in terms of overall enrollment by 22% in a 4-year period.
almost a quarter decline in enrollment in 4 years.
In 4 years. And I think, and I'll make reference to this in the future when we talk about Dan Ritchie, but the thing is he had a 43% increase in enrollment, but over 16 years.
So this is a plummeting picture.
Yes, you would definitely have picked it up if in the Denver Post.
And then what were the effects of that on the university's operating margin? Obviously, that was not a good situation. How did it play out in that dimension?
Well, in 1984 and 85, the university had rather substantial operating deficits. I think in the neighborhood of $4.5 and $7.5 million, and that's on top of total revenues of only $70 million. So those are big numbers.
Like a 10% deficit in 85.
That's exactly right.
Wow. And so then what happened in the next few years?
Well, then I think that there were what I characterize as rather heroic actions on the part of Dwight Smith and other members of the senior staff and the board to operate at a break-even, essentially, and they had operating surpluses between $100,000 and $200,000 in 86, 87, and 88.
So very, very thin surpluses, but surpluses.
But surpluses.
And to achieve that, that was being achieved in the face of declining enrollment. So what kinds of things did they have to do to offset those declining enrollments and allow the university to break even?
Well, there were, relative to the faculty base, substantial reductions in faculty to align with the declining enrollments. And then there were also some less profitable operating units or degree offerings that were discontinued.
So pretty difficult decisions.
Yes, indeed.
To say the least. So that takes us up through FY 88. What happened in 89 then?
Well, there was a deficit, and it was $975,000. And it was a bit of a surprise. And it may not have been a surprise to everyone, but at least the magnitude was an incredible surprise. And $975,000 is still a lot of money.
It's a lot of money today. It was a huge amount of money on that revenue base.
Yeah.
And so that takes us to 89. So let's move forward. It's about the time that Dan Ritchie came on board. Tell us what happened then.
Well, Dan came on board in 1989, as you mentioned, and one of the things that he did, as it directly affected me, was he hired you. And Dan began a number of things, and he began to focus, if you will, on quality, and he was, if you will, he was a quality disciple. And we began to focus not only on the business systems, which you would expect from somebody with Dan Ritchie's background, but he focused on the quality of the student experience, and that was significant. And things began to change, enrollments began to increase. There were other people at the University of Denver, and there were people who contributed to the university who, if you will, were willing to invest their time, their attention, and their money in Dan Ritchie. And as a result, he has the incredible reputation for not only being a successful fundraiser, but he built a number of new buildings.
We certainly did, and we've talked to Dan about that. So Bob Koon, following Dan, and we've gone through 16 years very quickly here, during which the university went through this really amazing transformation physically and programmatically and in other dimensions. But just looking at the financial dimension for a moment. So then Dan is followed by Bob Koon in 2005, as I recall. What was going on at that point? And you're the CFO at that point. What was happening? What was notable from your perspective?
Well, enrollments continued to increase, and in fact, there was not an operating deficit. I'll say it the other way. There was positive operating margins during the entire period that Dan Ritchie was the chancellor, during the entire period that Bob Koon was the chancellor, and it has continued to the present.
So, without regard to a specific chancellor for a moment, what were the policy-based or administrative-based actions that you think may have contributed to this remarkable turnaround? I mean, here the university goes from huge deficits relative to its revenue base to stabilization and then another surprise deficit, and then begins have positive operating margins, and which became very significantly positive during that time. So we had great leadership, but from a systems point of view and from a financial point of view, what was going on that supported this change? Because this is a dramatic change.
Yeah, well, there were a couple of things, I think. And it goes then back, if you will, to the time frame of when Dan Ritchie came on board and when you were the chief financial officer. But it has continued and is still durable today. And that is, the university began, and you were the architect of this. You designed a system where the accounting and the budgeting system was coterminous with the university's system of decision-making and authority. And and I was working for you at the time, that's why I say we also developed and implemented the gain-sharing policy, which aligned, if you will, the financial incentives of the university with enrollment growth. And so all of those things combined together gave us the ability, if you will, to strengthen the balance sheet. We were able to partially fund new building construction and major renovations, and we grew the endowment, along with philanthropic support as well.
Craig, during that same period of time, actually when Bob Koon was the Chancellor, the nation, indeed the world, went through the Great Recession. And obviously DU is strong and getting stronger, but that was a very significant event. What kinds of things did you do as CFO, or did the board do from a policy perspective to try and deal with that?
Well, there were two things that stick in my mind. One was we had a lot of our liquidity invested in a particular money market fund, and the money market fund had exposure to real estate. And these real estate pools were subject, if you will, to poor underwriting standards. So upon investigation and due diligence, we withdrew that. And we were the second firm in the United States to withdraw that. And it was well over $100 million. And we avoided a liquidity problem as well as any potential losses. That's number one.
Wow.
And our board, by the way, midway through the presentation at a board meeting, then said, "Is that a recommendation?" And I said, "Yes, it is." And they said, "So moved." So it was a positive outcome for the university, no doubt about it. And the other thing that was happening, and it probably happened about 3, 4, 5 months after that, the presidential race was suspended, as you recall.
Yes, indeed.
And nobody knew how far this recession was going to go. And so we had 3 members of the board. And you had Trig Marin, who was the chair of the board, Don Sturm, who was the chair of the Finance and Budget Committee, and Ralph Nagel, who was a member of the Finance and Budget Committee. They met with the Chancellor, who was Bob Koon at the time, Greg Kvistad was the provost, and myself, and on any number of occasions. And we met, the 6 of us, and we began to take a look at strategies that would bolster the university's balance sheet, and we did. And we also took a look at it, and we wanted to make sure that not only enrollments were maintained from fall to winter, but that students indeed returned. And in fact, they did, and enrollments increased 2007, 2008, and 2009.
So during the depth of the Great Recession,
Yeah.
DU had taken steps to, first of all, secure its financial position, and then continue building enrollment, which was fortunate, but the result of a lot of hard work on a lot of people's parts, I'm sure.
Mm-hmm.
The other thing, and one of the things that I don't think is as well known, is your work in terms of the university's bond rating. You alluded in your early comments to discovering as a young auditor how important bond ratings were. When I joined the university, we were barely investment grade, and that was being kind. We had to pay for letters of credit to secure everything we did, which of course added to our expense platform. That has changed dramatically, and you had a great deal to do with that. Can you kind of walk us through that whole process?
Yeah, I'd be happy to. This was a very enlightening experience for me because about a year and a half after you joined the university, we went to New York City and we talked with 3 of the major bond insurers, and we were rated, as you just referenced, triple B, and that was our credit rating, and that's 1 notch above investment grade, the lowest investment grade rating. And we did not obtain bond insurance, so we had to trade on our own credit of triple B. 1 year later, with increasing enrollments and another year of operating surplus, we were able to get bond insurance, and our debt, because it was insured, traded AAA. And what I thought was interesting in the bond issue when we were unable to get insurance, all we were doing was attempting, if you will, to refund existing indebtedness because we wanted to take advantage of lower prevailing rates. We weren't increasing the university's leverage, and we were still unable to get bond insurance. But then over this 25-year period, we have had declining interest rates, we've had increasing enrollments, we've had strong operating margins, so we not only have taken advantage of refunding of various bond issues, but we have issued some new money bonds to build new projects, particularly in the residence hall area. And the one thing that I would say is that finances, bond ratings for that matter, they follow strong programs and strong leadership. So all I had to do was essentially assemble the team and tell the story. But the work, as you clearly alluded to, took a lot of people, but they contributed to these very substantial positive results.
Well, but truth to be told, you really led that effort, and it has made an enormous impact on the university. What is not always understood is that as you improve your bond rating, you can do, as you just described, refinancings, which lower your cost of carrying the debt. And so the university was leveraging strength. As it got stronger, it leveraged the strength, which made it yet stronger because our costs were going down, or we could assume new debt.
That's right, and then you're able, if you will, to take those savings and program it into, reprogram it, repurpose it, if you will, into things that add value. And student success is probably what we would recognize as the #1 goal of the university.
Absolutely. Craig, I'd like to turn our focus inside your organization. As the Chief Financial Officer and Vice Chancellor for Business and Financial Affairs, you have a wide range of activities reporting to you. So to begin this discussion, could you just identify the areas of the university that report up to your position?
Well, in the physical environment, you have the architect's office, the facilities planning and management department, which works on the construction and the operation and maintenance, if you will, of the grounds as well as all of the buildings, and the environmental health and safety office and campus safety. In the financial environment, you have the controller's office, who is responsible for all of the managerial and external financial reporting as well as all of the tax filings and the issuance of long-term debt. They participate in all of that process, as well as the risk management department and the student financial services.
So you've got it's a very large operation reporting up to you. One of the things that you have undertaken, and I think with great success, is to do multiple bottom line kind of analysis and to bring your people into the planning, the execution, and then the assessment of their own work in a way. Could you describe? I think it's been wonderfully successful. Can you describe that?
Yeah, I'd be happy to, because it's something that I think is, I hope, durable upon my leaving the university, because people are focused on quality outcomes. But they didn't get there, if you will, entirely by me. They got there because they're doing good work and they have a direct line of sight to the Chancellor. 3 chancellors in a row, we've had the opportunity, if you will, to have these annual quality meetings where Dan Ritchie, Bob Koon, and now Rebecca Chop, we have the opportunity to talk about the individual metrics that individual departments are focusing on, as well as then creating a dialogue around that with the chancellor and the provost. So you have people every day thinking about what do their contributions make to student success and other things that are elements of the strategic plan.
Well, your leadership over these many years in the financial area, and as we just described, well beyond the financial area, has just been, in my view, extraordinary. As you've dealt with the challenges and the opportunities, and you've seen so much change at the university, what values have guided you? What do you think, from an ethical and a moral perspective, are the guiding principles that have shaped your decisions and your leadership?
Well, it doesn't make any difference what functional area we're talking about. If we take a look at who we're here to serve and we elevate everything to that level, it's about students and student success. And I believe that you can ward off a lot of arguments and differences of opinion if you focus, if you will, on who we're here to serve.
Well, Craig Woody, thank you so much for sharing your contributions through our DU Oral History program. I hope you'll join us in the future as we continue the story of the University of Denver's remarkable renaissance. I'm Jim Grismer. Thank you for watching.